Welcome to this explainer. Today, we're going to demystify accounting, not as some dry mathematical chore, but as the dynamic language that actually drives strategic business decisions. If you've ever felt totally overwhelmed by financial statements or wondered how businesses translate their daily grind into a clear strategic picture, you are absolutely in the right place. Here is our quick roadmap for today. We'll hit the language of business, the 5-step accounting process, business activities and supply chains, internal versus external stakeholders, and finally, the great divide between financial and management accounting.
All right, let's jump right into Section 1, the language of business, defining our foundation.
At its core, accounting is really just a translation process. Picture a chaotic pile of scattered receipts, payroll stubs, and utility bills. Accounting takes all that raw, everyday noise and turns it into a clear, standardized language. And as this definition shows us, the whole point of this process, from identifying right through to communicating, is purely to support smart, effective decision-making. You see, accounting doesn't just exist to keep the taxman happy. It actively empowers organizations. By tracking financial transactions, a business knows exactly where its cash is flowing. By measuring performance, you know if you're actually winning. And ultimately, it gives you the exact intel you need to plan ahead. I mean, you literally cannot steer a ship if you don't know your current speed and coordinates, right? Moving on to Section 2, the 5-step accounting process, taking us from raw data to actual decisions. So to speak this financial language fluently, we rely on a very logical 5-step flow. First up is gathering, literally just collecting the raw data. Next is analyzing, figuring out the financial impact of those transactions. Step 3 is recording, where we systematically input this into ledgers. Fourth is reporting, rolling all that data up into clean financial statements. And finally, Step 5, interpreting. This is where we actually look at the reports to make those crucial strategic moves. When you look at the full cycle, you can see how a simple, isolated transaction transforms into a huge piece of the company's broader strategic story. For example, a single swipe of a credit card at a register isn't just recording money changing hands. It makes the invisible flow of cash totally visible, telling a manager if that new marketing campaign absolutely crushed it or if a product line needs to be cut. Okay, Section 3, business activities and supply chains, focusing on the physical flow. To really grasp what's being tracked here, we have to anchor these concepts in physical reality. If you follow the flow of goods, you'll see an item move from the manufacturer to the wholesaler, then the retailer, and finally to the consumer. And here's the key. Every single stage in this chain adds value to the product. Accounting rigorously tracks the markup and the precise costs added at every single jump. Let's make this concrete. Take a massive retailer like ShopRite, operating at Phase 3 and selling directly to us, the consumers. They have completely different operational needs compared to a Phase 1 manufacturer like Precision Tech CC, who creates raw goods like typewriter ribbon. Notice that CC there? That stands for closed corporation, a specific legal structure. The grammar of our accounting language is universal, but the vocabulary heavily depends on whether you're a giant public retailer or a specialized, smaller corporation. Which brings us to Section 4, internal and external stakeholders. Who exactly is reading this story? So, with the data processed and the goods flowing, we really need to ask, who actually uses these numbers to make decisions? Well, the answer lies in our stakeholders. A lot of times, people just assume the business owners are the only audience. But in reality, it's a massive, diverse group. We're talking the broader community, government authorities, employees, suppliers, and absolutely the customers. A stakeholder is anyone with a vested interest in the organization's financial performance, and they all rely on these numbers for vastly different reasons. Broadly speaking, we can split these readers right down the middle into 2 camps. Internal users, like your management team, need this data to plan daily ops and evaluate performance. Think of a manager figuring out if they have the budget to hire a new team member. On the flip side, external users, like investors or creditors, look at this to assess the overall risk and health of the firm. That's the bank deciding whether or not to greenlight a $1 million loan. And that leads us perfectly into Section 5, financial versus management accounting, the great divide. This totally different need for information creates a huge split in the accounting world itself. Check out the direct contrast here. Financial accounting is entirely geared toward those external users, and it looks backward. It focuses on past performance through formal statements. Management accounting, though, that's strictly for the internal team. It's future-focused, generating internal reports to keep the business agile and moving forward. Let's zoom in on the financial side for a second. Because outsiders like banks and the government rely heavily on this data, financial accounting has to play by very strict rules. It rigorously follows standardized auditing procedures. The outputs have to be official, things like the statement of profit or loss or the statement of cash flows. Basically, it's the formal, historical, and totally verifiable record of the business. Management accounting, on the other hand, is a whole different ballgame. It doesn't deal with standard tax documents. Instead, it runs on dynamic, real-time dashboards designed to help internal leaders create actual value. It helps managers control costs, boost team performance, and maximize efficiency day in and day out. It's less about proving what you did last year to an auditor and way more about figuring out how you're going to win tomorrow.
And that brings us to a pretty powerful closing thought. Whether you're digging into the strict historical records of financial accounting or the forward-looking dashboards of management accounting, the core truth is the same. As you think about your own career or business goals, ask yourself which side of this financial language is going to be most vital to your success. Because remember, if you don't measure it, you simply cannot manage it. Thanks so much for hanging out with me in this explainer, and keep learning.